स्क्रीन शेयर कर दे। नहीं, ड्रॉप डाउन में जा, एंटायर स्क्रीन अलाउ, विधि है क्या देख ले सर। हाँ, उसको राइट ये अनेबल कर। हाँ, पूछ ले एक बार, विधि कैन यू हियर, प्लीज टाइप यस।
एक मिनट पहले इसको कॉल करके उसको बोल दे।
हाँ, यू रेडी? ओके, सिर्फ रिप्लाई करो, आपको आवाज सुनाई दे रहा है क्या?
Vidi, can you hear?
उसका रिप्लाई नहीं आ रहा
आ
है।
रहा है, आ रहा है। उसने बोला कि आपका आवाज स्क्रीन से आ रहा है, स्क्रीन शेयरिंग चालू है।
Okay, then we will start now.
Okay, great. So last time we covered what is fundamental analysis. We saw how to draw balance sheet, income statement, and cash flow. We did some of the ratio analysis. We saw what are the types of ratios and how to derive those ratios. Now, other part which we will cover today is corporate actions. So let's go into that. So the first corporate action is like dividend. Normally these companies, they reward their shareholders by paying dividend. So there are some companies which will pay you good dividend so that public are interested in investing those companies, right? And why do companies pay dividend?
To reward their shareholders.
Exactly. And obviously, if the business or the company does not have capital requirement, for near future, they would not like to hold the cash with them, and lower the return on investment for the investors. That's why they prefer giving dividend to the shareholders, right? Whenever company pays dividend, they have to pay dividend distribution tax. After that, dividend comes to investors. But in the current budget, the dividend distribution tax was abolished, and the individuals who get the dividend, they are being taxed at the income tax slab rate. So it depends from individual to individual whether now they want this dividend or not, in whichever tax slab they falls. So accordingly, it is good for someone, it is bad for someone. So accordingly, people will decide whether this dividend is good for not. For example, if we know, there are certain people who look at, or certain investors who majorly look at dividend yield. What is the annual dividend yield company gives? So obviously they would now want to see what is the post-tax annual dividend yield. And if that beats their expectations, then only they like to stay, invested in that company. Otherwise, they'll have to, deploy their capital somewhere else. Now, whenever company declares the dividend, so there are certain actions in the stock prices. So we will first understand what are they. So whenever company announces the dividend, so that is called as declaration date. So this is a date on which company announces that when it will pay the dividend, right? That is called as dividend date. So for example, if we are talking about earlier we were talking about Bajaj Auto, so we will take the same example. Suppose Bajaj Auto today they came up with a news that they will declare dividend in next 15 days or in next 1 month. So today's date is the dividend date, declaration date, right? So from Monday, obviously now people know that Bajaj Auto will pay me dividend. Say suppose they say we will pay you dividend of 5 rupees. We will take example in Excel. Suppose price of Bajaj Auto is 100 rupees. This is the share price, right?
Yes.
The dividend it is paying is say 5 rupees. Just an example. This is the news which came today. So today's date, which is 29th of Feb, is called as dividend declaration date. Right? Now, what is today's closing of Bajaj Auto? 100 rupees.
Yes.
Now people will get, suppose Bajaj Auto says that on say 15th of March, we will pay the
Dividend.
dividend. So dividend payment date is 15th of March. Perfect. So on Monday, when stock market will open, just think what will happen to the stock price.
Expected to go up by.
Exactly. Stock price is expected to go up by certain amount. Why? Because the investors they want to eat this dividend for just 15 days. If they invest in this stock for 15 days and when the company takes the list of shareholders, in that list if they have their name is there, they will get this dividend of 5 rupees. So right now if I invest 100 rupees in Bajaj Auto, by 15th of March I will get this 5 rupees. So what is my expected return on investment? I'm not thinking anything on the stock price movement as of now, but I just want to eat this 5%. So my expected rate of return is 5%. That too in 15 days. That's why the demand for the stock price will go up. So on Monday, which is 29th, 1st March, 2nd March. Monday is 2nd March?
Yes.
Yeah. On 2nd March, March 2nd, 2020, the price of the stock will become dividend. Means the demand has increased for that stock and that is because of the dividend. All other factors are same. Nothing has changed in the stock, in the economy, nothing has changed. Just because company has announced dividend, that's why the demand for stock will go up. That means if fair value is 100 rupees, extra demand, whatever it is there, it is only for dividend. That's why the price has the premium of dividend.
Yes.
People are ready to give premium just because of dividend. That is why it is called as come demand. So wherever you see, if anyone says, okay, the price of XYZ stock is trading at 200 rupees, come dividend. So it should immediately come to your mind that okay, the stock is going to pay dividend. That's why some premium of dividend is inbuilt in the price. This should be your conclusion and that should come to your mind. Perfect.
Yes.
Now in India, I guess we have T plus 2 settlement date or T plus 1.
T plus 2.
I guess it's T plus 2. Let's take an example of T plus 2. It will depend from country to country. So to be in the eligible list of shareholders, I need to buy this stock before 13th of March because 15th is the dividend payment date.
Sorry.
So my name as an eligible list of shareholder has to be there by 15th or before 15th, say by 14th end of the day. So that means if the settlement takes 2 days, So that means by 12th I need to buy the stock,
Yes. Yes.
right?
Yeah. It should be in your account.
It should be, I should buy the stock by 12th, day 13th and 14th. By end of 14th, I will be in the list of shareholders. And on 15th, when company will pay dividend, I will get the dividend,
Yes.
right? So this come dividend. So basically, people will people need to buy this stock till 12th of 20. So your dividend date starts on 2nd of March and it ends on 12th of March. On 13th of March, now people know if on 13th I buy this stock, I will not be eligible for this dividend, right? Because by 15th end of day I will get the shares.
Yes.
So my name will not be there in the list of shareholders, right?
Yes.
So as soon as on 13th market opens, the premium of that dividend will disappear,
Yes.
because now if investors are buying that stock, they will not get this dividend. So why will they pay you premium? So now it will come back to its original price. So this date is called as ex dividend. So whenever company announces dividend, they will tell you that okay, the payment date is 15th of March and we will pay dividend to the eligible shareholders who have the stocks on 15th. So the NSE, or the share price, it will mention, the brokers will mention you whether what is the come dividend period and what is the ex dividend date. So if anyone says 100 rupees is ex dividend price, which means that the company has given dividend, and if I buy the share on this particular day, which is 13th of March, I will not be eligible for getting the dividend.
Well,
Perfect.
okay.
Record date is again the same thing. Record date is when they record who is the eligible shareholders. Perfect. So when a company pays dividend, the immediate impact on the share price is people will start demanding more because they want to get the benefit of dividend.
Yes.
So they will try to do margin benefit analysis for that. Hence, the price of the stock will go up.
Yes.
In general, in theory, in practical, it might be different, but in theory, this is the case. Once the ex dividend date is achieved, the stock price will fall by that premium and it will again trade at its fair value.
Yes.
Perfect.
Yeah.
So this is the case of dividend. See, what is the impact of dividend? The dividend declaration tend to lure investors to purchase stock near or after declaration date. They purchase the stock before ex-dividend date and are willing to pay a premium. On ex-dividend date, since the new investors are now not eligible to receive dividends, they try to buy stock at the price just before dividend declaration date, thus leading to fall in stock price as they are unwilling to pay premium. Perfect. Now let's move to another corporate action, which is stock split. Have you heard of the term called stock split?
Yes.
So what stock split says that if the company has its face value and market value.
Yes.
Where is face value available? I will show you an
We had
NSE.
done it in our Excel last week. When you had shown the example,
Exactly.
initial share capital of the company.
Exactly.
We had done.
Let's go to Bajaj Auto. See, this is the face value of Bajaj Auto, 10 rupees. Right? If company says that okay, I will reduce the face value I will reduce the face value to 1:5. Okay, so what they are saying, the whatever is the current face value, which is 10 rupees, I am dividing that face value into 5. So basically now the new face value will be 2 rupees, 10 divided by 5.
Yeah.
So right now, if Bajaj Auto, they decide that they want to split the stock to 1:5, the current face value, which is 10 rupees, will now be 2 rupees. Okay.
Yes.
So what will be the impact on the share price?
Could be similarly divided.
Exactly. Your share price will also be split into 5. So now the new share price will be, if we see the current share price is 2,888. So it will be is equal to 2,888 divided by 5. Approximately 578 rupees. So this is the new market price of the Bajaj Auto. If suppose they do stock split. Right? And so what will happen now, since I am a shareholder of the Bajaj Auto, I had first, suppose example, only one share of face value 10 rupees. Now what will happen? I will get the same face value, but the new face value will be 2 rupees. Hence, I will get 5 shares. 5 into 2, 10. Whatever original face value it was, I will get the same amount of face value, but I will get additional number of shares in that case. So if you know some of the companies, they try to do this stock split so that there is enough liquidity in their stock. Example, MRF. I'll give you the example of MRF.
Yes.
Stock price is 66,111. To buy one stock, you need 66,000 rupees. So obviously, it is not possible for each and every retail people or, most of the people to buy this stock at 66,000. Even institutional investors will not invest or trade in such kind of stock because there are very low participants in such stocks.
Yes.
Hence, there will be liquidity problem in such kind of stocks. Right now we can't see what's the liquidity over here, but generally the volumes will be very low. So to make it more liquid, companies do announce stock split. In this case, if company announce stock split, so it is 66,000 66,111 divided by 5. So your stock price will come to say 13,000. They can announce to a face value of 1 rupee. So they can do 1:10 also. So if that happens, stock price will trade at 6,600 rupees. If stock price is now trading at 6,600, obviously liquidity will improve in this stock.
Yes.
More liquidity will improve, more volumes will come, more participants will trade in that stock.
Yes.
When there is enough liquidity, enough volume in the stock, it is possible, it is like, there are more chances that stock will be trading at its fair value because there are more participants. In a big market where there are 1,000 traders, it is possible that, the price arrived is very close to its fair value. Whereas in a market where there are only 10 players or say 20 players, so these 10, 20 players can form a cartel.
Yeah.
And they can, deviate the stock price or deviate the price from its fair value.
Yes.
That is the reason companies want, enough liquidity or volume in their stocks. But in some cases, it is a case that, companies do not announce, like we say in case of MRF. Even though stock price is that high, they are not doing that. So, see, always, there will be two school of thoughts. Some promoters, they will think that, okay, we want more liquidity in the stocks. We want, our stock price should trade at the fair value. That's why announce a stock split and more retail participants can come. The second school of thought, they will think that, okay, we don't want much retail participants. We just are happy with the small group, and we want that, our stock should quote at premium, and only a small group of people should enjoy that benefit. Hence, such companies will not announce stock split. So there are two school of thoughts. Both are right in that their sense,
Yeah.
right? So this is about stock split. So company splits the face value of its shares. Suppose a face value is 10 and company announces 1:5 stock split. The new shares will have face value of 2 rupees. The stockholder will receive 5 stocks for each stock, because earlier he had a 10 rupee face value stock. Now, since face value has reduced to 2, his number of stocks will increase accordingly. So he will get 5 shares. The market price of the stock falls, but the market cap of the company does not change. What does this mean?
Market cap is to current price.
Exactly. So, for example, in this case, Bajaj Auto, the current price is 288 rupees, 2888, and assume that company had 100 outstanding shares. So, what is the market cap? 100 into 2888. Whatever is the value is the market cap. Right? 2,88,000 is the market cap. Now, since company has given a stock split of 1:5, your share price has been split into 5. Hence, your number of shares will also increase by 5 into 5. So, your stock price has decreased, your outstanding shares has increased. That's why your market cap will remain same.
Yes.
Got it?
Yeah.
Now, the second impact of this will be, because of outstanding shares has increased, the earning per share EPS of the company will come down. I'll give you an example. What is EPS?
Number of
Net income
divided by number of
divided by outstanding 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 shares.
shares.
This is my earnings per share. Whatever is my earning, what is my earning is my net income. Earning per share, so my net income divided by outstanding shares will give me EPS. Suppose earlier my net income is 100 rupees. My outstanding shares were 100. So my EPS was 100 divided by 100. My EPS is 1.
Yes.
Now, since my outstanding shares has increased, so my outstanding shares will become 500. So look at my EPS now. It is 0.2. So whenever you do analysis of any company, if you just look at the EPS number and if you see a huge deviation, earlier EPS was 1 and right now it is 0.2. So our immediate conclusion would be that the earning per share has come down of the company. Means company is not doing good. This will be our understanding. But is it true?
No.
So you need to do second level analysis to find why earning per share has come down.
Yes.
So in this case, if we see the company has announced stock split, so now we know that this price or this EPS is adjusted EPS. This EPS is adjusted for stock split. So while doing analysis, I'll have to make that adjustments properly. And since we compare apple to apple, suppose we are comparing Bajaj Auto and Hero Honda. Earlier, this was 100. My EPS was 1 rupee. Suppose EPS of Bajaj Auto is 0.9. That means both companies have almost same level of EPS.
Yes.
So you are not differentiating between Bajaj Auto and you're not differentiating between Hero Honda. But now since there is a stock split and this company's outstanding share have increased, hence my new EPS is 0.2. Now if you see Bajaj Auto is trading at 0.2, I mean the EPS is 0.2 and EPS of Hero Honda is 0.9. So you will conclude that EPS of Hero Honda is good.
Yes.
So that's why you need to do that adjustments into EPS to arrive at the right earning per share. So while doing analysis, I will do 0.2 and since they announced 1:5, so I'll multiply this by 5. So what is my actual EPS? 1 rupee, which was the case. So I will do that reverse adjustment while doing analysis. This is one impact of EPS.
Yes.
We have one valuation ratio called price to equity. What is this ratio? Market price divided by earning per share. Now, market price of say Bajaj is 100, just giving an example. And EPS before stock split was 1 rupee. So what is my PE ratio? 100 divided by 1, which is 100. I will not take 100. So let's take 100 only. That's fine. So this is my PE of Bajaj Auto. Bajaj Auto. This was my PE ratio before the stock split. Now, since company has announced stock split, my EPS came down to 0.2. So if I replace this 1 to 0.2, look at the PE ratio. It went up to 500 times. So this is the impact of stock split on the ratios and your earning per share. So that's why you need to do that reverse adjustment to arrive at the true value. So if I have a model and if my model picks the price and EPS automatically, so this will be the output that I will get. Perfect. My whatever is my market price and my new EPS is 0.2. Hence, my model will tell me that the PE of Bajaj Auto is 500 times. But you need to understand why it has increased. It has increased because of stock split. Hence, you will go back and you will do that reverse adjustment and you will multiply this by 5. I am multiplying this by 5 to arrive at the true PE.
Yes.
Got it? Now, if someone tells you that okay, XYZ company is coming with a stock split, in your mind, you should be clear now what will be the overall impact in the face value of the shares. The face value will go down from 10 to say 2 rupees or 10 to 1 rupees depending on what ratio they are telling. Outstanding shares of the companies will go up.
Yes.
Because outstanding shares will go up, that's why your EPS will come down. Your EPS is coming down, that means your price to equity ratio will go up. So you have to do that adjustment to do proper analysis. Understood what is stock split and how it will impact the company and the ratios. Perfect.
Yes.
We were here. The stockholder receives 5 stocks for each stock. That's fine. Market price of the stock falls, but market cap does not change. Right? This is the tool used by companies to make stock more liquid and affordable to the investors. Okay. What is reverse stock split? It is the opposite. The same thing. Earlier, we divided this 10 rupee face value stock into 2 rupee. In reverse stock split, what we will do? We will convert this 2 rupees face value stock to a 10 rupee. So accordingly, it will be a complete reverse transaction. Suppose you are holding 5 stock of 2 rupees face value. Now you will own only one stock, which will be a 10 rupee face value. If stock price is trading at 100, now it will trade at 500. This is a very, such kind of actions generally are not done by company. I have not seen much company come going into reverse stock split. They would not do that, right? That's it. So the next corporate action is bonus. What is bonus?
You will get additional shares.
Exactly. So in this case, companies give additional shares to the shareholders to reward them. Stock split is not a reward to shareholders. Dividend is a kind of reward. Bonus is a kind of reward. I doubt nowadays companies are giving bonus. But earlier, most of the companies or giving bonus shares to retail investors was in very demand. And people used to love those companies which used to give bonuses to the shareholders. So, what is bonus shares? Bonus shares are the free shares that the stockholder receive against the shares that they already own. For example, if company announces a ratio of say 2 is to 1, a company announces that we will give 2 is to 1 bonus thing, it means that for every one share, stockholder will receive 2 shares. Okay. So basically now for every one share, he will receive 2 shares. So your stock has the number of shares have doubled, right?
Yes.
Earlier you were having 1 shares, now you have 2 shares. Perfect. Again, the dates are similar to that of dividend payment dates. Declaration date will be same.
Yes.
Instead of come dividend, it will be come bonus.
Yes.
The impact on the share price will be, since the demand of share will increase, that's why price is expected to go up.
Yes. Yeah.
Perfect. If I know the market value, the true market value of Bajaj Auto is say 100 rupees, and company announces that we will give bonus, whatever ratio. So obviously more and more people will want to have buy this stock.
Yes.
That's why demand will go up. That's why stock price will go up. So whatever is the premium, that premium is because of the bonus. Hence, at the price, you will always mention that the stock price is come bonus, which means the premium of bonus is included in that stock, right? Again, X bonus date, because there will be a record date. If there is a record date, you have to buy that stock before that, before 2 days of that record date,
Yes.
right? If you don't buy before that, then you are not eligible for bonus. Hence, on the X bonus date, stock price will fall. If the fair value is 100 rupees, so it will fall by 50 rupees. Whatever is the ratio, it will fall by that ratio. Fine. Then there is a record date and the payment date. Payment date means the bonus date. Perfect. Now, what is the impact of bonus on face value of the share? Will there be bonus share? Will there be any impact
Yes.
on the face value?
No, on the face value it won't be. On face value it won't be, but it's market cap.
On the market cap will also remain same.
No.
Suppose here my outstanding shares were, suppose
Initial capital will increase.
that's
Share
fine.
capital.
Suppose my price is 2888, right? 2888, and my original shares were 100. This is my market cap.
Yes.
Now, if suppose I am announcing 1:1 or 2:1, whatever.
Yeah.
So for suppose company is telling for every one share, we'll give you one additional share. So that means for total outstanding shares will now increase from 100 to 200.
Yes.
So this will become 100 into 2.
Yes.
Your share price will go 288 divided by 2. It will go down by the same proportion. Your market cap will not change. Your face value will not change. Only change will be the outstanding number of shares. Because now your outstanding shares have increased, your EPS will come down. Your EPS will come down, hence your price to equity will go up.
There's one question I have.
Yeah.
Since we announced a bonus,
Yeah.
the initial capital that we had started with before announcing the bonus was face value into outstanding shares.
Right.
That was say whatever the amount was. Face value was, example was we have taken 2.
Here,
We have
right?
taken 5.
Original, no, this is dividend. So
Sorry.
original face value of Bajaj Auto is say 10.
So now we have 10 into 100, that was 1000.
Exactly.
Now we are giving bonus 1:1. So
Yeah.
we are giving face value again 10.
Yeah, exactly.
So it becomes 10. Now number of shares have increased. 200.
Yeah.
So 2000 became the share capital.
Exactly.
Initially it was 1000.
Yeah.
Now it became
Exactly.
2000. So what happens with that?
I'm coming to that.
Okay.
So what will happen? Your outstanding shares increase and your EPS also goes down by same proportion.
Yes.
Right?
Yeah.
So your share capital will increase. What happens whenever company in the share capital, it is always outstanding shares into face value.
Yes.
Whatever premium, for example, whenever company comes with an IPO, it will tell you that okay, the face value of my shares are 10 rupees. Face value of my shares are 10 rupees. So this 10 rupees will go into share capital. And if IPO price is say 100, so what is the premium? 100 minus 10.
Yes.
This 90 rupees will go into share premium account.
Okay.
So basically the face value is 10 rupees. So this is my share capital and this is the premium I have taken from the market.
Yes.
So this premium will go into share premium account. So
Okay.
that will be say whatever is the outstanding number of shares. 90 into outstanding shares, that will go into share premium account.
Okay.
Got it?
That share premium account will hold that 90 rupees.
Exactly.
So now what is done with that? How it is used?
Exactly. So whenever I am giving this bonus, so I will have my share capital, share premium account. From my net profit, I will have shareholders fund.
Yes.
My funds will get transferred into my equity. So whenever I give bonus, so the amount of your share capital will increase. So that increase is from this account. You deduct amount from your share premium or reserves and surplus account and you transfer it to share capital.
Okay.
So that will be the balance sheet impact on the case. So ultimately your shareholders equity will remain same, but funds will be deducted from reserves and surplus and it will be transferred to share capital.
So they don't utilize it, they put it somewhere or
See, ideally this is your own fund. So they will utilize these funds for rewarding shareholders for any capex or anything.
okay.
For giving dividend, for giving bonus.
Okay. So they don't utilize it for any other purpose other